Happy Monday, everybody. I hope you had a great weekend. There's still a lot going on week to week, so let's jump right in, recap last week, and preview the important week ahead. Today is May 22, 2023, and this is your Monday market update. Stocks opened slightly higher on Monday in reaction to news that the EU regulators have approved the Microsoft Activision acquisition. This has been back and forth. I imagine it's still not done. Then came the outright horrible Empire Manufacturing Index, which fell below even the worst expectations. This is not what we want to see if we still want to think soft landing. But it's anything but soft landing. But remember, it is only just one number. Fed heads were all over the tape, as I mentioned last week, and as I've mentioned many times, it is curious how the Fed heads test the waters with different thoughts to see what effect each comment has. Bostic and Goolsbee, there for the pause, and Kashkari, he's in the no pause yet camp. And they want to see how the market reacts to this. So we did get some debt ceiling tape bombs also. Biden announced a meeting for Tuesday. Then McCarthy threw some cold water on any optimism when he said that he had little confidence that an agreement would be had by the weekend. Spoiler alert, he was right, nothing yet. In the end, not so much to report. The Dow was up less than 0.25%, S&P up just about 1/3%, and the NASDAQ was up 2/3%. The open on Tuesday was down a bit on the heels of disappointing Chinese eco data, Germany too. The big U.S. eco data, the retail sales, also a bit light, but revisions to March and a better core reading and good news, or in this case, good and bad news. Bad for stocks. Again, bizarro world. Debt ceiling drama was center stage, and again, in my opinion, though I'll report on all that happened last week on it, it is just that, a drama. This will not be a major story when all the dust settles. I do think that every time we go through this, our standing worldwide is weakened, but let's be realistic, our government system has these faults. But as Winston Churchill once said, democracy is the worst form of government, except for all the others that have been tried. This did whipsaw markets last week, and it'll continue to do so today, but in the end, we'll again focus on the inflation, the Fed, the interest rates, and my favorite, the earnings. McCarthy did reveal that no progress had been made, and the flavor of the day was not enjoyed. Home Depot rained on the parade in the earnings side, and although it was probably not as bad as it seemed. The market ended in the red, but not so bad. The Dow was down 1%, S&P was down about 2/3%, and the NASDAQ was down under 1/4%. Wednesday brought pre-market gains, the White House optimism on the debt ceiling. Watch the bouncing ball, framework for a deal. That was the line that moved things. Good news from regional banks, or at least not bad news, and that helped things too. Recall that banking crisis? What crisis? Tone of the debt deal changed. Remember the run to the other side of the boat. Yes, 3 weeks ago, Biden said negotiations are not an option. Clean debt ceiling raise, period. No strings attached. The president will not negotiate with the GOP. Now it came to be on Wednesday, there will be no default. Willing to negotiate agreement as is doable, and all sides are prepared to negotiate. The tone has changed. How long do you think that's going to last? We'll see. Not to worry, we still have Janet Yellen with catastrophe, disaster, and tragedy. Again, I believe this will pass. No matter, PMA, positive mental attitude, all over the street. The Dow, S&P, and NASDAQ were each up about 1.25%. You know how I feel about that? Yes, the algos and computer trading. There are a lot of other tea leaves to read, and I'll try to bring those to you when time permits, or at least in our meetings. But note that Gen Z is behind in their credit card payments. And by the way, they're still not even paying the interest on their student loan debt. What is going to happen when that returns? These are questions we need to ask to gauge the future strength of the economy. The stocks did extend gains into Thursday after opening flat and churning around, digesting the move from Wednesday. Regional banks, soft landing type eco data, stable global markets, lower than expected jobless claims, all helped markets go up. Wait, lower jobless claims? That's good for the economy, right? Why is that not bad for the markets? Today, oh yeah, bizarro world. For today, that's good. Yes, McCarthy also reported being in a much better place, helped things out a lot. Another tea leaf that we have watched, the U.S. dollar is creeping up again, and that's not so good for multinationals. We have a lot of those in the S&P. 40% of revenues by some estimates in the S&P come from outside the United States. All equity markets opened slightly higher on Friday as the markets followed through. Soon after the open, 9 out of the 11 S&P sectors were positive. Things were good. Things were looking good. Just down the final stretch of the day, just keep news wires quiet until, yes, debt ceiling. About midday, the GOP halted negotiations, and that was all it took for this fragile market to go into the red. Not free fall, mind you. Powell was also speaking, and he mentioned that rates may not need to go as high as he expected. Maybe things are going to get better. By 1 p.m. Eastern, only 4 sectors were still positive. Stocks did close off their lows for the day. The Dow was down about 1/3%. S&P was down less than 1/4%, and the NASDAQ was down 1/4%. For the week, all in the green. The Dow was up about 1/3%. The S&P was up over 1.5%, the best week since March, and the NASDAQ was up over 3%, also the best week since March. What will this week bring? Will it be sugar plums, or will it be something wicked this way comes? Fed heads are heavily weighted early in the week. Bullard, Bostic, Daly, Logan, Waller. That's just through Wednesday. Wednesday, the FOMC minutes from last month come out. Wrap up the week with high-frequency data, the jobless claims, and then the really important one, PCE, the PCE price index, the personal consumption expenditures. Does knowing what it stands for help? Just know that this is what the Fed loves to watch for inflation pressures. Add in the University of Michigan sentiment survey and the survey of upcoming inflation expectations. We have a lot to hear from as the week comes to a close. Just to mention what I think is one of the most important things. As you know, there are also some big earnings releases. Remember earnings. Big retail, big tech, even some banks. All in all, the debt ceiling is the drama that's happening now, and for now, until the tone changes again, this is all that matters. Note that over the weekend, at least late on Sunday, I saw a tweet from McCarthy about the upcoming meetings. It sounds like me talking to my family about their spending habits. Just kidding. Really, though, very paternal sounding. No more credit cards for you, Joe Biden. We'll have to see how this plays out. Remember, the reason we stay focused on the long-term goals and long-term in our goals is that this all washes out. If you want to see how, just ask me to show you some charts from the 1970s and even more recently. I'll be back on Thursday with planning thoughts. I previewed them with the idea of tracking your 401k and other retirement accounts. So come back on Thursday for that. Friday is a Jewish holiday. Have a great week.